Yeah, I think one of the key pieces to this whole thing is when you talk about popping this credit bubble, what essentially happens here is the virus starts to spread. There is very serious health concerns with that. So whether it is fear-induced or actually the true health concerns, what eventually occurs is everyone has to stay inside, right? And so you get a complete drop off in travel. We're seeing across the United States, these reservation apps are reporting 50% or more, in some cases, drops in restaurant visits. The airline industry is completely being decimated. They're losing of millions of dollars, cruise lines, hotels, Airbnbs, et cetera. And that slow trickle across the economy is not just on the consumer side, it also happens on the corporate side. And so in a world where everyone has been levering up with debt for years now, all of a sudden they get a slowdown in revenue and EBITDA in true cash flow. They can't pay the interest on that debt. And you get this kind of trickle effect across the economy. See these mini blowups of that debt. And I think that's really what you're talking about here in terms of as that domino effect starts, we don't know how big it is and how long it will last. And that's kind of the big concern, if I understand kind of where you're coming from. Is that?
Bingo. Yeah, you phrased it so well. Yeah, I've forgotten to come back around to, those of us who were looking for who realized we were in an incredible debt bubble, saw a blow off top. Like I was tweeting out yesterday, looking at updating the Fed numbers in my own spreadsheet. We had a 10% increase in the total amount of debt outstanding in just the last 2 years in the United States. That's a huge acceleration and increase in debt. We certainly didn't grow GDP 10% over the last 2 years. Let's put it that way. So we just levered in a drunken stupor. And so those of us who were looking at those kind of statistics were sensitive to what could pop the credit bubble. And then when the coronavirus came around, again, Doug Nolan was the first person that I saw who called it back then. None of us were how big of an issue this was going to be. But let me make this clear. The coronavirus is going to blow over. Flus blow over. The 1918 flu, it had 3 different waves, but it only lasted 15 months. And it killed several hundred million people in the world, but it burned itself out in 15 months. This too shall pass. The bigger issue is exactly what you talk about, which is that there are a lot of leveraged businesses who were not set up to have to withstand a shock like this. And it turns out with the debt bubble that we've had in the U.S. economy, that the U.S. economy is actually really vulnerable to this. And as I was tweeting out back in January, after reading Doug's post, I'm worried about China's economy as well, because China has accumulated debt. It only took them 15 years to accumulate the same amount of debt that it took the United States more than 50 years to accumulate. So the acceleration of debt in China has also been something that a lot of us have been watching as well. And so that you've got certainly the Western world, the Americas and Europe having been heavily leveraged going into this coronavirus event, but you also have China heavily leveraged as well. So what's interesting is that it really is global.